Eric Muathe with Muathe.com. In this video, I want to take a look at what could cause and what causes stocks to make major turn points or major highs and major lows. So there are many factors, and sometimes it's a guesswork in real time when it's happening. Most of the time, on hindsight, it's clear, but once you learn some of these tricks that the market always has up its sleeves, it gets easier to identify some things. So let's take a look at some of the key things that show up whenever there's a major turn, either on the way down or on the way up. For example, let's begin here at this high. Now this high, you can see, was a breakout attempt. You can either use the intraday highs, but there was a multiple attempt to break out that failed. Now, failed breakouts are notorious for taking instruments lower. So that's one reason we can say that this was a major high. It failed to break out. Ultimately, it goes down. All right, there's another reason. You can see here at these highs on a monthly closing basis, RSI is rejected when it tries to move above 69.1. That rejection is with uniform action, and of course after that rejection we get this reaction down. That's another reason that sometimes can cause stocks to come off their highs or lows. Here, during these lows here, we see that number one, the RSI had held above 30.9. Stock would go on to make a lower price level, but the RSI did show a slight improvement and did not drop below 30.9. So that negative divergence, I should say, actually it's a positive divergence, my bad, long day maybe. All right, positive divergence. We made lower prices while the technical parameters were improving. That's positive divergence. Ultimately gives us this low and we get some type of a recovery. All right, good. Let's take a look at this high here. We can say that was a major high at the time, or at least a level to watch for turn. And let's see what could have caused that level to be a resistance area using the RSI. We can see what we are doing is coming back to test this break. So we break below here, we begin this drop. Now extend that same line, and you can see that same line becomes double top rejection. Here and here, double top rejection of those highs. In fact, if we extend that same line, you can see that it continues being relevant for quite some time. For example, you can see resistance here of those highs, resistance here of those highs. Ultimately, we move above that line, and that begins this move higher. All right, so good. Now let's take a look at this low here, and to find that low we have to figure out that this is where we have this movement. So we moved above this range here. We can use that information because we know that there was a recovery of those lows. Those were major lows for the stock. Take that information, draw a straight line. Should be something like that. We bounced on this line with uniform action, hence the uniformity method. Check the description of the video for a link describing the uniformity method in detail. So uniform action support here of those lows. Good. Which actually begs the question right now as to whether the stock has come back to a level of potential support. Remember, this is a monthly chart, all data monthly. So we know month to month, if we bounce on this line with any type of uniform action, it could be we touch it and bounce or make a double bottom, who knows. But any type of uniform action support on this line is going to be good enough to begin the next move to the upside. And at the same time, we know that if we crack below this line, something we haven't done since 09, that's going to suggest that there's going to be even a bigger move lower. Even though it's had a big move, if we crack below this line, expect much lower prices. So it's either make or break, support or break for the next major trend. Let's take a look at this high and this high here. Now we know that this is where it broke down. This was a major break in 07 of those highs. Take that information, draw our uniformity line, should be somewhere there. You can see what we get out of this is that there is a move above the line here, which is this entry in 2014. The stock goes on a nice run until it cracks back below that price or that RSI level, cracks below that, which is this movement lower, and then we get that pullback here. And then we can see that in late 2016, early 2017, we go above the line and back below it with uniform action. That becomes the most recent sell signal, and since then the stock has seen a major drop. So that is consistent with our observation there that that was where to expect a turn. And don't forget that this is uniform action above 69.1 and back below it. That uniform action or rejection tends to be significant in that that is suggesting that the stock is due for a reversal, which is exactly what we get here. So I know it's a quick summary, but just trying to touch on some of the things that do cause major highs and major lows. The more we train our eyes, the more it's easier for us to identify those types of situations in real-time trading. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. Now, one thing I should add here is, even though I'm using a monthly chart, remember all these technical parameters do work in whatever time frame you trade. Just be on the lookout for those types of things, because they can help you understand where the next swing trade is inclined to go. Peace and blessings. ESCS. Mwah. Woo! Yeah.